Good afternoon, everyone. I welcome you all in our income tax session. And in today's class, we are going to discuss some more interesting provision of capital gain. So, Nitin, good afternoon. Hardik, good afternoon. Lahari is good afternoon. Pranav, good afternoon. Neeru, good afternoon. So, good afternoon, namaskar, sat sri akal, vanakkam, etc., etc. So it's good to see you all again, and I believe that you all are actually studying very hard to achieve the goal of your life, and that to become a chartered accountant as soon as possible. Abhishek, good afternoon. Jinki, good afternoon. Manvi, good afternoon. Neha, good afternoon. So I believe that you must have start the revision part of income tax and all other subject also. So for your attempt, it's my advice that your syllabus at least completed before 2 months of the examination. And the last 2 months should be for revision purpose only. And always revise in case of numerical topic, always revise the theoretical provision as well as the important questions also. And in the last session, I have also discussed with you that how to mark the important questions. So you are able to revise that specific chapter provision as well as the numerical within a very short span of time. Neha, good afternoon, or Pallavi, good afternoon, Kasak, also good afternoon. So today we will discuss some part two of capital gain chapter. In part one, we have discussed the basic part, the definition of capital asset, transfer, then exempted capital gain, then a lot of provision regarding those cases in which the chargeability year and the transfer year are different. So after all those provision, we generally come at this point that we are able to calculate the capital gain now. But this is not the end. We are still far to calculate the tax calculation on capital gain because whatever we have discussed till sale consideration, less cost of acquisition or index cost of acquisition. And after reducing that, whatever we found that is long-term, short-term gain or loss. But there is one more provision which will come between the capital gain and the calculation of tax liability, and that is exemptions. We have to discuss the exemption part also. So there are certain exemptions are there in which, or technically we should call them not exemption, they are technically investment scheme. So if you are having a capital gain, suppose 50 lakh rupees capital gain on transfer of a residential house, then either you are going to pay tax on it, and government has framed some exemptions also that you are able to exempt this complete capital gain if you are fulfilling certain specific condition, etc. So if you transfer a residential house and there is a 50 lakh rupees long term capital gain on transfer of that residential house, then there is section 54 which says that if you purchase a new residential house for 50 lakh rupees, then the whole capital gain is going to be exempted. There are certain, of course, condition restrictions are there. And if you're able to comply with all those condition and restriction, then your 50 lakh rupees gain could be exempted completely. So you need not to pay tax. But these are called exemptions. Section 54, 54B, 54D, 54EC, and 54F. So technically 5 exemptions which are based on investment purpose. You cannot get the exemption like income is generally going to be exempted. Like agricultural income is exempted from tax. So the income is going to be exempted generally, but these are called exemptions. But these exemption will be available on incurring some expenditure, or we can call them some investment. So technically the name is exemption, but the character and the nature is different. So generally exemption means that like we can claim exemption of HRA, etc. under salary head. We have exemption of gratuity income, leave encashment exemption, etc. over there. So in these kind of exemption, the exemption which falls under capital gain, there is not pure exemption. There are technically hybrid exemption. So the name is exemption, but you cannot avail the exemption on the basis of income. For the taking the benefit of exemption, you have to invest in a specific scheme, and we have almost 5 investment scheme in which if you are going to invest, you can claim a certain amount of your capital gain or complete amount of capital gain could be exempted. There's technically only one exemption on section 1037. That is exemption which is on income base. But balance 5 exemption, those are on section 54. Those are not on the basis of income, but those exemption are on the basis of investment purpose. So what is section 1037? What is section 54, 54B, D, E, C, and F? That we will going to discuss today. Fine. So Lahari Maruju is asking, sir, I am having a query regarding slum sale. Can an entity transfer a part of the undertaking and receive the consideration? If you transfer a part of the undertaking, that would not amount to slum sale. In that situation, you have to calculate the capital gain separately on different asset. The only possibility to be a gain to under a slum sale calculation that the complete undertaking should be transferred. Only in that situation, we are able to calculate the gain as slum sale under section 50P. Okay. Good afternoon, Satyam Raj. Good afternoon, Manoj Kumar Makwana. Okay, chalo. Let's go. So let's get started with the thought for the day. And before that thought for the day, let me ask you a simple question, which is related to my thought for the day. And that is, what is the opposite of success? This is a general question. What is the opposite of success? Pratnav is saying failure. Lahari is saying failure. Of course, Vishmita is also saying failure, failure. So opposite of success is failure. Till now, of course, even if somebody is going to ask me, I will also going to answer this. But after reading this thought, I guess your thoughts are going to be changed. Okay, so technically, there is a new definition that what is the opposite of success. So failure is not the opposite of success. In practical life, you can understand it like this. It's a part of success. So if somebody is successful in his life, then definitely there must be some failure. Because without failure, there could not be a true success. So success is a journey and in which failure would be a part because you learn from your failure. You grow with your failure. So fail better and try better. And one day you will be successful. Okay. So from today, you should understand if you are not able to clear something, if there is a failure in your life, so that is going to be the part of your success, the part of your journey. So do not consider it as opposite of success. Consider it as a part of success. So that is a very optimistic, very positive thinking approach. And I really liked it. And that's why I also said this thing. I have heard from somewhere that try better and fail better. And one day you will be successful. You will be unstoppable. So now let's get started with the provisions sheet of our second part of capital gain. So here is section capital gains, capital tax gain we have to learn in this part, and there would be exemptions. What are the exemptions for capital gain in India? So first of all, we are discussing the exemptions, and after that, we will discuss the taxability, how or what rate should be applicable in case of capital gain. In different kinds of capital gain, there are multiple tax rates and provisions. And because of that amendment which has been come on 23rd of July, etc., the things became more messy, or we can say more complicated also. So technically, what are those tax rates, how we need to implement them? That is a very complicated procedure, but we will discuss it after this part. These are section 54 of Income Tax Act. That's a majority part, those capital gain exemption. So those 5 exemption, what we are going to discuss is under section 54. These are section 54, 54B, 54D, 54 EC, and 54F. These are 5 exemption we are going to discuss. Those are investment base. Generally income exempt, but these are exempted on the basis of investment. There is only one exemption, which is technically on income base. This is one exemption under section 1037. So this is exemption which is actually in the nature of exemption because certain kind of income, if arise from a capital gain, is going to be exempted if section 1037 conditions are fulfilled. So first of all, we will discuss section 1037, then we will move forward for other sections under section 54. Okay. So what is section 37? It's a very simple section, but it consists a lot of conditions. A lot of conditions you can see. The section says any capital gain, whether long term or short term, to an individual HUF. So the second part, that the person should be individual or HUF from transfer of agricultural land. So the third condition is this exemption would work only when there is transfer of agricultural land, and where this agricultural land should be, whether it's in urban area or rural area. Which agricultural land we are talking in this case? Think about it and let me know. Is it about rural area or urban? Which agricultural land we are talking about, rural or urban? Apurva is saying rural, Hardik is saying urban, Lahiri is saying rural, Kavita is saying urban, Manvi is saying urban. Okay, Pallavi is saying rural, and Archana is saying urban. Okay, Archana will tell. Archana, why rural? Sorry, why urban? Why not rural? Why this is not rural agricultural land? Why we are considering urban agricultural land over here? What is the reason behind it? Can anyone tell? What is the reason that if you are saying that the answer is urban? So I'm asking to those who are giving the answer urban, that why urban? Why you are considering it as an urban agricultural land and not rural agricultural land? Or that could be both. Both could also be answer. So is it both also? Sania is saying correct. Look, we have discussed the definition of capital asset. Larry is saying because anyway, rural agricultural is already exempted. It's not exempted, it is not a capital asset, not applicable cases. Well done. So the capital asset definition we have discussed under section 214, which says that rural agricultural land is not a capital asset. That is not a capital asset. So which is not a capital asset. Rural agricultural land is not a capital asset. You must have remembered the section 214 which says all assets are capital asset except stock in trade, personal movable asset, and the third point was agricultural rural land. So if something is not capital asset, then capital gain provisions are not applicable. So rural agricultural land already out of the purview of capital gain. So if it is out of the purview of capital gain, there is no requirement of exemption. Because if something cannot be chargeable to tax under capital gain head, then it's not required any kind of exemption. So technically it is not applicable for the purpose of capital gain. So we do not need any exemption for rural agricultural land. So here the agricultural land is technically urban. Because urban agricultural land is a capital asset. So if it has been transferred, there could be capital gain. And if there could be capital gain, so that agricultural land which is in urban area might need this exemption. Rural does not need it because it is not chargeable to capital gain head at all. So understand, first point was it should be a long term or short term, any kind of capital gain. The assessee should be only individual HUF. If the assessee is other than individual HUF, this exemption would not be applicable. The land should be agricultural land and in urban area by way of compulsory acquisition. So this exemption will only work when you have an agricultural land. It has been compulsory acquired under section 45(5). So that is point number 4. So it should be compulsory acquired. Generally, in case of compulsory acquisition, there is original compensation, enhanced compensation provision. So these are taxable on the basis of OC and EC. But if the agricultural land, which is in urban area, has been compulsory acquired by government, then any OC or EC received is going to be exempted under section 1037. Suppose I am living in a city and I am having a residential house, and in the same city I am having a agricultural land in urban area. Government decide to acquire both my agricultural land in urban area as well as my residential house under compulsory acquisition. They decided to pay me 50 lakh rupees for my residential house as a compensation and 80 lakh rupees for my agricultural land. Now that 80 lakh rupees compensation is going to be exempted because I am an individual. The land is agricultural land in urban area and it has been compulsory acquired. But the residential house which has been compulsory acquired is not going to be exempted. So section 1037 does not say that compulsory exemption is exempted. Only agricultural land in urban area compulsory acquisition is going to be exempted. So shall be exempted provided there is one more condition. Provided the OC, that is original compensation, EC, enhanced compensation received on or after 1st April 2004. So if OC or EC has been received on or after 1st April 2004, then only that compensation would be exempted. But there is one more condition. So this was point number 5. Generally, what happens in a sentence or in a part of a paragraph, only 1 or 2 points are important. But you can see in this 4 or 5 lines, mm, a lot of things are important to understand for understanding this exemption. If such land, one more important condition is that if such land, that means that agricultural land has been used for agricultural purpose for 2 years immediately preceding the date of compulsory acquisition. So this is also a very important condition. Suppose government acquired my agricultural land in urban area on which I am running agricultural activity from only last 1 year. Before that, it was not used for agricultural purpose, only from last 1 year, from the date of acquisition. I was using that agricultural land for agricultural purpose. Before that, it was not used for agricultural purpose, so we cannot claim this exemption. So for the purpose of exemption, that particular agricultural land should have been utilized for at least 2 years prior to the date of compulsory acquisition. उससे पहले किस purpose में utilize होती है does not matter, but preceding 2 previous year should be utilized for agricultural purpose by such individual or his parents. So even if parents are using that agricultural land for agricultural activity, even then I can claim the exemption or by HUF. So in a 4 line points, there are almost 6 or 7 important things you need to remember for claiming this exemption. If any of one condition does not satisfy, in that situation, that exemption could not be claimed. Now, suppose I am giving an example that there is an agricultural land in urban area for an individual which has been used for agricultural purpose by him last 3 years. Fine, so all the conditions are fulfilled. So this land has been compulsory acquired on 1st April 2002. So compulsory acquisition takes place on 1st April 2002. But the original compensation has been received on 1st October 2004 and EC received on 1st January 2008. So compulsory acquisition has been done before 1st April 2004. Acquisition before this date and amount received after this date, OC and EC both. So exemption would be there for OC or EC or both. Komal Jain is asking, sir, what is compulsory acquisition? Welcome, Komal, in our class. I guess, in third session, I guess in the last session, we have discussed the provisions of compulsory acquisition. So if you have not taken the previous classes, please, first of all, you should go through with the previous classes. Only then you will be able to understand what is compulsory acquisition. Okay. So both would be exempted because the provision says it does not matter when the compulsory acquisition take place. We need to see when the compensation has been received. So if the OC or EC has been received after on or after 1st April 2004, both are going to be exempted. Well done. Okay, now one more condition I'm going to change in this question. Suppose now OC received on 1st February 2004 and EC received on 1st January 2008. So if OC received before 1st April 2004, then what will happen? This is going to be taxable as per the provisions of compulsory acquisition, and only this is going to be exempted. Clear? Now the real question what I would like to ask is this. Suppose OC in this case, like compulsory acquisition has taken place, on 1st April 2002. So compulsory acquisition has been taken place on 1st April 2002. OC decided is 50 lakh rupees. Clear? Now listen this example very carefully. Out of this 50 lakh, 20 lakh received on 1st January 2004 and 30 lakh received on 1st May 2004. So now how much OC is going to be exempted and how much OC is going to be taxable? Now this is the main question I would like to ask you. So tell me how much amount is going to be exempted or taxable in this case? Pranav is saying 30 lakh will be exempted. Okay. Or Aisha is saying 30 lakh exempted. 30 lakh is exempted. 20 lakh is taxable. Jinki is also saying 20 lakh taxable and 30 lakh exempted. Rathi, Malini is also saying 30 lakh exempted. Arding is saying fully taxable. 30 lakh exempted. Abhishek is saying the correct answer would be fully taxable. Nothing is going to be exempted. Now the question must arise, why? Because when the part of the OC would have been received in 2004, January 2004, we received 20 lakh rupees. So under section 45.5, we have discussed that in case of original compensation, full amount is going to be taxable when full or part of the amount has been received by the assessee. So when 20 lakh has been received on 1st January 2004, so that means in assessment year 2005-6, the sale consideration we need to take full 50 lakh rupees, because in case of OC, what is the taxability rule? The taxability rule was whether a part of the OC is received, we are going to tax the full compensation. So at the time of 1st January 2004, because we received 20 lakh, so we have to tax full 50 lakh rupees. And whatever real amount 30 lakh would be recovered after, that has no relevance because we have already taxed 50 lakh rupees exemption completely when 20 lakh has been received. So if part of the OC has been received, if part of the OC has been received before 1st April 2004, then full OC is going to be taxable. Okay. Both thing has been explained over here. Even compulsory acquisition is before 1st April 2004. But compensation is received on or after 1404, it shall be exempted. But if part of OC is received before 1st April 2004 and remaining part of OC is on after 1st April 4, then exemption of such receipt even if 2004, then no exemption. No exemption for such receipt which has been received on or after 2004. So there would not be any exemption if part of the OC has been received before 1404. If part of the EC has received before and some more EC has been received after, then it would be possible. But in case of OC, the full amount is going to be taxable. So that was section 1037. That is the real exemption. And you can see how much important points in this a simple 4 or 5 lines. We have almost 7 important things to be remembered to implement this exemption in case of examination. Clear? Now here we come with the section 54 exemption. And you can see multiple points are there. Almost 5 exemption. Every exemption is having almost 6 points. So 5 exemption we need to remember, and there are multiple sub point also. So technically in a single exemption, there are almost 10-11 points. So for total 5 exemption, almost we need to remember 55 or 60 points. And let me tell you, if there is a question of capital gain in the examination, I personally believe exemption would be the part of that question. Without exemption, I personally believe the capital gain question would not be there. So that is the importance of these exemptions. What exemptions are actually going to do? In case of capital gain, we have discussed the provision till now, like we have discussed the sale consideration. We need to find it out. Then the format say expense on sale. Then we will have our net sale consideration. Then we need to deduct index cost of acquisition or cost of acquisition. Then index cost of improvement or cost of improvement. Then we would have our long-term, short-term capital gain, capital loss. Fine. So if there is gain, then there would be exemption, not in case of loss, because exemption would be there only in case of gain. So now we have to provide exemption under section 54, 54B, 54D, 54EC, and 54A. Clear? So these are the exemption that is going to be reduced from your capital gain. That would be your taxable gain, or gain chargeable to tax. So these 5 exemptions we are going to discuss, and these are very, very important from the point of view of your examination. As I told you, in my opinion, the question of capital gain definitely is going to include these exemptions implications. So one by one, we are going to discuss these exemptions. Just stay with me. We will discuss each and everything in detail. Also, we are going to discuss today the KY test your knowledge questions. So you should have a paper, pen, etc. with yourself. When we will complete our exemptions part, then we will move on to the test your knowledge questions. Okay. Section 54. The first exemption is section 54. And first of all, we have to understand in every exemption, and that is the applicability. When the exemption is going to be applicable. Kavita Kula is asking, what is OC? OC means original compensation, Kavita. You must take the previous lectures, students. It's a humble request from my side to all of you. Kindly do not watch any lecture in between. We are taking, I guess, 5th session of capital gain. So if you are joining this session from today only, so it's my humble request that you should go through with the previous lectures, because it would not be possible for you that to understand those things which we have already explained. Okay. Fine. Chalo, so first section is section 54, and as I told you that first of all we should understand the applicability of exemptions. First of all, we should understand that which exemption will be applicable in these circumstances. So every exemption is having a specific condition in which that exemption is going to be applicable. And section 54 says that if you transfer a RH, RH is for residential house. So if you transfer a residential house, T stands for transfer. If you transfer a residential house and against that residential house transfer, you purchase or construct. P stands for purchase or construct any other new residential house. So what we need to transfer, if I have transferred a residential house and if I need the exemption of section 54, then what should I need to purchase? I need to purchase or construct a new residential house. If I transfer residential house and I purchase shares against that, then section 54 exemption cannot be claimed. So first of all, the heading will tell you which asset need to be transferred and which need to be purchased for claiming the exemption. So section 54 heading is saying RHT. RH stand for residential house transfer. And if residential house being purchased or construct, then section 54 will be applicable. Then you can claim the section of 54 exemption, but there are multiple restriction conditions also, but the applicability will start. This section says, okay, come with me, I will tell you how you can claim this exemption. But if you transfer a residential house and purchase shares or jewelry, in that case, this section 54 would not be applicable. Any other would be applicable, that you will come to know when we will discuss all these 5 sections. So section 54 implication would be only in that case in which there should be a transfer of residential house and there should be a purchase of new residential house or construction of a new residential house. Clear? The assessee, who can claim these exemptions? So the assessee can be only individual or HUF. So whenever there is a condition of residential house, the assessee would be only individual and HUF. So there are only 2 sections in which there are residential house included. So whenever there are residential house provision, assessee would be always individual and HUF. So a partnership firm, a company, a LLP, they cannot claim this exemption. Second point, the asset should be long-term capital asset. So your residential house, what you are transferring, the house you transfer should be a long-term capital asset. If it is a short-term capital asset, you cannot claim this exemption. So you must be seeing that the applicability which says there should be a residential house for the purpose of transfer and there should be a purchase of residential house or construction. So this point also having multiple other conditions that this exemption would be there, but you should be individual HUF. The transfer residential house should be long-term capital asset. If it is a short-term, go away. There would not be exemption under section 52. Now the third is very interesting and very important also. Now the provision says amount of exemption. How much exemption, total amount I can claim. So the provision says amount invested in 1 or 2 residential house. So whatever capital gain you have, either you can purchase a single residential house and you can claim the exemption for the amount you purchased a new residential house, purchase or construct. Or even you can purchase 2 residential house also. And the total investment in both residential houses, you can claim the exemption of that also, but there are certain conditions. Let me tell you in a simple thing. Suppose there is long-term capital gain in case of residential house, suppose 150 lakh. Now case A says, Mr. A purchases 2 residential house. Residential house 1 for 70 lakh rupees. Residential house 2 for 90 lakh rupees. So if the other conditions are fulfilled, then we can claim the exemption of both these houses from this capital gain. So there would not be any capital gain because this 70 lakh is going to be exempted. Just a second. After this 70 lakh, we have remained with 80 lakh. So this 90 cannot be utilized full. We can only utilize maximum 80 lakh rupees out of this 90 lakh rupees exemption. Total investment is 160 lakh, but we can claim only maximum 150 lakh. The gain could not be in negative due to exemption. So the gain would be now there. There could also be a case, suppose there was 150 lakh rupees and we purchase only one residential house for 160 lakh. So even we can claim the exemption of 150 lakh rupees like this also. So the benefit would be available for either you can purchase two residential house, then you can claim the benefit of both of these residential house as an exemption, or you can also claim single residential house exemption, but there is a twist in this condition. First of all, two residential house benefit can only be claimed if the gain is up to 2 crore rupees. My gain is less than 2 crore rupees. So in case of gain of up to 2 crore rupees, you can claim the benefit of two residential houses. Otherwise, you can only claim the benefit of one residential houses. Suppose now if I've changed the gain up to 250 lakh rupees, so it is exceeding 2 crore. So the two houses purchase benefit is only if the gain is up to 2 crore rupees. So now in case number one, we can only claim one residential house exemption. Which would we will claim? 90 lakh or 70 lakh? Always claim the higher one. So we will claim the residential house number 2 exemption, 90 lakh rupees. We cannot claim this 70 lakh exemption. We can only claim one house exemption and we always take the higher value of house exemption. Clear? In this case, of course, there are single house purchase of 160 lakh. So we can claim the full exemption of 160 lakh. There is no problem. So understood? We can claim two residential house exemption only when the gain does not exceed 2 crore rupees. If the gain exceed, if it is up to 2 crore, you have the option either claim one residential house exemption or maximum two. But if the gain exceeding 2 crore, then you can only claim one residential house benefit. The two residential house benefit is also one more condition that this benefit can be claimed by SSC only once in a lifetime. Once in a year, nahi keh rahe hum. We are saying once in a lifetime. Like suppose in this case, if SSC has claimed the exemption of two houses in this previous year, fine. So if this has happened, that we have claimed 70 lakh and 80 lakh both benefit in this year. And after 2 years, again, after 2 or 3 years again, the long-term capital gain on a residential house comes, suppose 100 lakh. And now the SSC purchased two more residential house for the purpose of exemption. One for 60 lakh, one for 50 lakh. Now this exemption cannot be claimed. You can only claim one residential house exemption. The two residential house exemption is only once in a lifetime. So if you have exhausted that benefit of two residential house exemption in any assessment year, then in future you cannot claim ever the benefit of two residential house exemption. Only one residential house can be exempted in this situation. The houses can be exempted only if they are located in India. These houses should be in India. That should not be outside India. The purchase property should be in India. If it is outside India, you cannot claim the exemption under section 54. So these are conditions which have been mentioned in the section itself, but I've explained you. So with the example, you might able to understand what is going to be happen in these kind of cases. We have also more examples later on. If purchase residential house is lower than LTCG, Lehari is asking, the remaining amount will be carried forward? No. If the purchase residential house is lower than long-term cap gain, the balance is going to be taxable in this year. So if the long-term cap gain is suppose 100 lakh rupees and you have purchased 80 lakh rupees residential house, then 20 lakh is going to be taxable capital gain on which you are going to pay tax. So now we are going to discuss the conditions, what we just discussed, that investment can now in two houses in India. If capital gain does not exceed 2 crore and two house exemptions only can claim once in a lifetime. If exemption claim for two house property in assessment year 25-26, then cannot claim two house exemption again in future. Only one house in a year can be exempted, even capital gain less than 2 crore. So once you have claimed the exemption of 2 houses in any year, then in future you cannot claim 2 houses benefit in the same year. Only 1 house exemption could be claimed. B point says, if capital gain increased 2 crore, then only 1 residential house exemption. Again, if the capital gain has been increased by 2 crore rupees, then automatically we cannot claim the exemption of second house. Only 1 house exemption, which having higher value, could be claimed. One more restriction, that maximum 10 crore rupees exemption you can claim. This is for overall limit. You cannot claim the exemption of more than 10 crore in any case. What exactly this wants to explain? Now suppose there is a long-term capital gain against a residential house for 12 crore rupees. And you have purchased new residential house 1. 2 residential house benefit you cannot claim because exceeding 2 CR, but you purchase 1 residential house, that is 11 crore rupees. So even it is less than 12 crore, but the maximum exemption under section 54 has been restricted to 10 CR. So maximum you can claim the exemption of 10 CR. 2 CR would be your long-term capital gain, which is going to be taxable. So the overall limit is maximum 10 crore in any case under section 54. So you can see how many multiple conditions are there also. So what condition we have discussed under section 54 till now? That there should be a transfer of residential house. There should be a purchase or construction of residential house. Assessee should be individual HUF. Time period should be long term. Amount of exemption, either you can claim 1 house exemption or 2 house exemption. But only 2 house exemption is lifetime exemption. If you have claimed that 2 houses exemption in a year, then you cannot claim 2 house exemption ever in your life. The 2 house exemption would be applicable only if capital gain does not exceed 2 crore. If it increases 2 crore, then only 1 house exemption can be claimed. And maximum exemption of section 54 in any case cannot exceed 10 crore rupees. I hope it's clear till now. Let's discuss the other provisions. Now, point number 1, 2, 3, condition we have discussed. Now we will discuss condition number 4. Second, Kassak is asking if second house purchase, then exemption up to 2 CR will be applicable. No. 2 houses exemption will only be applicable up to the capital gain of 2 crore rupees. So if the capital gain exceed 2 crore rupees, then the 10 crore exemption would not be eligible for 2 houses. Only 1 house exemption can be there. Like this. Like in this example, he purchased 1 house 11 crore and he purchased 1 more house for 3 crore. So this is irrelevant because the capital gain exceeding 2 crore. So second house benefit always gone in this case. You cannot claim the second house benefit in any case. Next is purchase or construct time period. Like in how much time we need to purchase the new property for claiming the exemption. Like I have transferred my residential house today only. So what is the date today? We are in the financial year 24-25. So today is 6 December 2024. So if I've transferred the property today, the residential house has been transferred today, then in which time or how much time I need to purchase or construct those new residential house for claiming the exemption as above. So the provision has been explained over here. You have to purchase or construct 1 or 2 residential house in India. And this has been given the time. The time period is 1, 2, 3. What is exactly the time? Let me explain you with the help of an example. Like suppose Mr. A has transferred a house today on 6th December 2024. And suppose the long-term capital gain is 170 lakh rupees. He has never claimed two house exemption earlier. So maximum he can claim exemption of two houses in this case. Clear? This has been discussed. But now the provision, what we are going to discuss is in how much time he need to purchase or construct those new property for which exemption could be claimed. So the provision says if he has already purchased a house before this date, 1 year, 1 year within. So if within 1 year from 6 December 2024, within 1 year, he has purchased a new residential house. Suppose he has purchased a new residential house on 10th May 2024, suppose. So this house purchase falls within 1 year from the date of transfer, within 1 year from the date of transfer. If he purchased any property before this 1 year, suppose he purchased this property for rupees 60 lakh, and he also purchased one property, but that is before 1 year. Suppose this has been purchased on 11th November 2023. So that has been purchased before within 1 year from the date of transfer from this date. Suppose that is for 50 lakh rupees. So that is irrelevant for the purpose of exemption because it has been purchased before 1 year from the date of transfer. We can claim the exemption of only that property which has been purchased within 1 year from the date of transfer. 1 year before within the date of transfer. So either you have purchased within 1 year from the date of transfer before. So that would be the case in which assessee already purchased a property with loan amount or etc. anyhow before the transfer of that property. So you have already purchased a new property on 10th May 2024 and now you transfer your another property. These both properties are different. Suppose this property is in Delhi and this has been purchased in Mumbai. So different properties we are talking about. So you already purchased a property in Mumbai for 60 lakh rupees and you purchase your property in Delhi or you sell your property which is in Delhi on 6th December 2024. So from this gain of 170 lakh, we can claim the exemption of 60 lakh rupees because this is eligible exempted property. And if you want to purchase property after transfer, generally we purchase property after transfer. Government has given the benefit that even if you have purchased in advance, property has been purchased in advance within 1 year from the date of transfer, before the date of transfer, then you can claim the exemption. But even if you have purchased property after date of transfer, the time period has been given 2 year. 2 year purchase after date of transfer. Clear? Suppose he also purchased a property within this duration, within 2 years from the date of transfer. And that has been purchased for suppose 55 lakh. So again, because it has been purchased within 2 years, suppose it has been purchased within 2 years. So this is also eligible for the purpose of exemption. We can claim two residential house exemption in this case. So both are eligible. But the exemption is for purchase and construct. So we have seen the purchase duration is within 1 year before the date of transfer, within 2 years after the date of transfer, purchase. And now the construction option has also been given by the income tax department that you can construct a property also within 3 years from the date of transfer. So if you think, I need to purchase any property, I don't want to purchase a property, I will purchase a land and I will construct it myself. Then department say, okay, now you have 3 years to construct the property and construction should be completed within 3 years. It should not be in running. It should be completed within 3 years. So suppose one property he has constructed also. He purchased a land and he constructed a property also within 3 years. And that property value, land plus construction cost 90 lakh rupees. So this house is also eligible for exemption. So now he has purchased total 4 houses. Out of these 4 houses, you can see this is outside the purview. The first one which has been purchased, this has been outside the purview. The first house, the second has been outside the purview. This third house is also eligible for exemption. And this fourth also eligible for exemption because he has been constructed this property within 3 years. If that has been constructed after 3 years, this was also outside the purview of exemption. So we have now 3 houses exemption eligibility, but you can claim only maximum 2 houses. So which two we need to consider? The first one we will take 60 lakh rupees benefit, of course. And the fourth one exemption we will claim. So we will have the maximum exemption in this case. That would be 150 lakh rupees. 20 lakh would be your long-term capital gain, which need to be taxable. Understood? Suppose if the gain is exceeding 2 crore in this case, we have taken the gain of 170 lakhs. Suppose it is exceeding 2 crore, then we will consider only 90 lakh rupees property for the purpose of exemption because that will give us the maximum exemption and it will lower the tax liability. I hope it's clear. You can take the screenshot of this also, so you will later understand what exactly we have discussed. 50 lakh, 55 lakh is also taxable, of course. Out of this gain, 20 lakh taxable. This is going to be, of course, this is not the taxable gain. This is purchased. Why this is will taxable? This is not a transfer. This is a purchase. This is the expenditure. Only 20 lakh need to be taxable. Why 50 lakh, 5 lakh is going to be taxable, Manvi? That is a purchase value, not a transfer value. Clear? Now, there are queries. B. Saikiran is saying, sir, getting exemption for one house property in a year, is it can be done any number of time in lifetime SSC? Yes, one property exemption you can claim number of time, any number of time. It does not restrict anyone, but we need to transfer a property first. You need to transfer a property or to claim an exemption. So you have to transfer a property in a previous year. That should be a long-term property. Then you are able to claim the exemption if you are going to purchase a new property against it, and you can do it as many times as you want. Lahiri Maroju is saying no exemption for construction before date of transfer. Yes, exemption for construction purpose is only available if construction is completed within 3 years after the date of transfer. The before benefit is only for purchase case. Sir, if the assessee takes the exemption of construction of residential house property, then sir, can he take exemption section 24B of income from house property? They both are different question, Hardik. They are not interconnected. Income from house property interest benefit you can only claim when you does not transfer that property. So if you have transferred that property, in that situation, you cannot take the benefit of interest in that case. And whatever amount of interest you have paid, etc., for purchase or construct of any property, that would be the part of the cost of that property. At a time of sale, you can claim the benefit as cost of acquisition and cost of improvement of in that case. Sir, capital gain tax is paid after 3 years. No, Anirudh. Capital gain tax need to be paid in this year. So there might be a confusion in your case. In everyone's mind, there should be a question that if we will get the benefit of this property within 3 years, so how we will find out this gain in assessment year 25-26? We are going to do this calculation in 25-26, and we are going to construct a property. Suppose this property construction has been completed in 2026. So we will get this amount in 2026. So how we can claim exemption in 25-26 for the future construction or for the future purchase? How we will get this knowledge of this investment in this year? Do we need to pay tax in the year we purchase or construct a new property? The answer is no. We have to pay tax. We have to calculate this gain in assessment year 25-26 only. So do I need to predict the future? Do I have a time machine in which I will sit and I will see that in after 2 year or 3 year, what would be the investment value? How it would be possible that my investment in future is going to be treated in this year only? How it is possible? So that is a very interesting question. And of course, everybody should think about it. How it's going to be possible? How I am going to claim this exemption? This we know because we have invested before that. So we know this information, but within 2 year purchase or within 3 year construction, that amount, how I will decide that yes, I am can claim the exemption of 90 lakh or I can claim the exemption of 55 lakh rupees. So this should be a question in your brain, and do not worry. Income tax already think about it, and we have the provision that how we are going to predict the future of this investment. Just stay with me. I will let you know how we will find it out this investment amount. We have all the provisions over here. Sheikh Tanya, exactly you are saying, you are asking the same question. Sir, exemption किस ईयर में क्लेम करेंगे? तो मैं आपको बता दूं, एग्जेम्पशन असेसमेंट ईयर 25-26 में ही क्लेम करेंगे। मैं पहले भी बोल चुका हूँ, किसी भी बच्चे को अगर क्वेरी हिंदी में करनी है तो आप कर सकते हैं, हिंदी क्वेरी आई विल आंसर इन हिंदी। तो एग्जेम्पशन तो आपको 25-26 में ही क्लेम करनी है। अब प्रॉब्लम यह है कि जो इन्वेस्टमेंट में विद इन 3 ईयर करने वाला हूँ 90 लाख या 55 लाख 2 साल में, वो मुझे इसी साल कैसे एग्जेम्पशन प्रोवाइड कराएगा या मुझे कैसे पता चलेगा? तो हमारे पास प्रोविजन है इसका। वी विल डिस्कस, वी विल सी दैट इनकम टैक्स already discussed that how we need to claim the exemption of future benefit in this year. Okay. Is this exemption for all type of capital gain? We have discussed, Nayan, that exemption is only for long-term capital assets, so it should be only against long-term capital gain. Kasak is also having the same question about the future. Of course, Larry also had the same question. Sheikh is also asking. Now we can apply for refund. No refund concept, Pallavi. We will discuss how it's going to be possible. First of all, till now, what we are discussing, it is clear that this exemption is for residential house transfer, residential house purchase construction. Okay. Assessee should be individual HUF, asset should be long term. The exemption could be for one residential house in India or maximum two residential house in India. Two residential house benefit will be provided only if your gain is not exceeding 2 crores. The maximum gain is 10 crore rupees exemption. The 2 crore exemption is a lifetime exemption. Once you claimed it, you cannot claim it in future. Till this, it is clear. The time duration is clear that we can claim the exemption of that house which has been purchased within 1 year before the date of transfer. We can claim the benefit of that house which has been purchased within 2 years from the date of transfer, and we can claim the exemption of that house which has been construction completed within 3 years from the date of transfer. इधर तक की बात क्लियर? ये होगा कैसे? How it will happen? That we will discuss after this point. Okay, चलो. Everything is clear. Well done. Let's move forward. Okay. Now this duration we have discussed. Purchase within 1 year before the date of transfer. Purchase within 2 years after the date of transfer, and construction within 3 years after the date of transfer. That we has discussed. Construction should be completed. Okay. Now your query, what you asked, that how it would be possible, that will be discussed in point number 5. Fine. So before that, we need to discuss point B and C. And the 5 number point will explain that how it is possible to claim the exemption this year for your future investment. But before that, we have to discuss the point number B and C. Now, point number B is saying that if you have claimed exemption under section 54 for one residential house or for maximum two residential house. Now, for those residential house, you can claim the exemption under section 54. Now, those residential house cannot be transferred for next 3 years. Now, there is a lock-in period. So, if you have claimed the exemption for any new house purchase or construct, so now that particular house cannot be transferred for within 3 years from the date of its purchase or construction. So there is a restriction that if you have claimed the exemption of any property, now you cannot transfer that property for next 3 years. Now suppose there was an individual. The sale consideration of the property he has transferred was suppose 150 lakh. The cost of acquisition or index cost of acquisition was suppose 60 lakh. So 90 lakh was suppose long-term capital gain for the residential house. Now he purchased a new residential house, suppose for rupees 80 lakh. All other conditions are satisfied, suppose. Okay? So 80 lakh rupees exemption under section 54 can be claimed. New house purchase. So the capital gain would be upon 10 lakh rupees. So till this, we have discussed the provision. Now the point number B says that this new residential house would not be transferred for next 3 years. You cannot transfer it for next 3 years. Now your question would be, if we transfer then? अगर हमने ट्रांसफर कर दिया तो क्या होगा? प्रोविजन कहता है यू कैन नॉट ट्रांसफर दिस न्यू प्रॉपर्टी फ्रॉम द डेट ऑफ परचेज. So if you transfer that property, then what will happen? The provision says if you transfer within 3 years. Suppose this new property has been transferred within 3 years. After 1 year, it has been transferred. The next year, you transferred it. You purchased in 2024, you transferred in 2025. So within 1 year, you have transferred this property. So now what will happen? The provision says, okay, you have transferred, we will take the sale consideration. It should be a short-term capital asset because within 1 year, you have transferred within 12 months. So it would be a short-term capital asset. So your sale consideration, whatever it would be, the question says this, the property which you purchased for 80 lakh has been transferred for suppose 105 lakh rupees. So now provision says if you transferred that property, then the cost of acquisition of that property, how much was the cost of acquisition was 80 lakh rupees. This cost of acquisition will be reduced from the exemption that has been claimed. So against this purchase of property, how much exemption you claimed? The full value. So the exemption claim is going to be reduced from the cost of acquisition. So now cost of acquisition would be 0 and the full value is going to be taxable. Short-term capital gain. So what exactly happened? Exactly what we are doing, that the condition was that you cannot transfer that property within 3 years. And if you transferred, your exemption would be 0. So technically what we are doing, we are just revoking the exemption in a different way. How we are revoking? Suppose if you would not have transferred it within 1 year, suppose the full cost is going to be deducted like 80 lakh. Then the gain would be 25 lakh. If this exemption would not have been taken back by the income tax department, then in the normal case, the capital gain need to be 25. Clear? But you just violate the provision which says you should not transfer it within 3 years, but you have transferred it. So the old capital gain benefit has been reduced from the exemption. So technically what we are doing, we are just taking back the exemption. Either the gain should be 25, but because we reduced your cost, so now your exemption we have taken back. So what should be the total gain now? 105 lakh. So that's why it is over here. That's just trying to understand what is exactly happened. So we just revoking the exemption by this provision. And how we can revoke it? We reduced your cost by the amount of capital gain claimed by you. So your cost was 80 lakh and the benefit due to this cost, we have reduced our capital gain of this year by 80 lakh. So if we reduce 80 lakh from your cost, so technically we are increasing your capital gain of this year by 80 lakh. So if you transferred after 3 years, then normal cost would have been deducted. But if before 3 years you have been transferred it, then your cost would be reduced by the amount exempted earlier. So technically what will happen? Your exemption benefit has been revoked by the income tax department. If I change this transaction, like suppose sale consideration was 150. Cost index cost is this. Long-term gain is 90, suppose. And now suppose new asset purchase for 105 lakh. So how much will exempt? 90 only exempted. So there would be nil gain. Now this asset has been transferred within 1 year. And suppose the sale consideration is 120 lakh. Now again, the cost of acquisition was 105 lakh, not 90. But how much benefit has been taken due to this? Only 90 lakh rupees exemption we have taken. So balance cost is need to be deducted from over here. So it does not mean that always cost will be zero. Cost will be zero only in those conditions in which the cost and the exemption was equal. But if the cost is higher and the exemption was less than the cost, then the balance would be allowed as your cost of acquisition. Understood? So you should not transfer this asset within 3 years. If you have transferred it, then the benefit of technically the exemption you have claimed would be confiscated from you in the manner that we are going to reduce your cost by that amount of exemption. Clear? So that is the provision. And it says newly acquired house property should not be transferred within 3 years after its purchase or construction. And if you want to know what will happen if you do this, so point number C is there. If newly acquired house property transfer within 3 years, the cost of new asset means that asset which has been used for the purpose of exemption on sale will be reduced by the amount of capital gain exempted earlier. So technically, what is going to be happen? The benefit you have claimed due to that exemption, due to that asset purchased as an exemption earlier, is going to be taken back by reducing the cost of the asset. Till now, it is clear? Because now point number 5 and 6 will solve the mystery that how you can claim the exemption of your future investment in assessment year 25-26. Okay. So now this is very interesting. Okay. Suppose there is long-term capital gain of 140 lakh. And assessee wants exemption. That I need exemptions. So I need to invest in purchase of a new residential house under section 54. Or I want to invest in the construction of a property. So I am having 2 years or 3 years for that investment purpose. But the problem is this, we need to give the benefit of exemption in this year only. Now for assessment year 25-26, we need to calculate the gain. Now the provision says for claiming exemption, under section 54. अगर आपको exemption लेनी है, like for 140 lakh rupees you have capital gain and you need to invest in new residential house either via purchase or construct within 2 years or within 3 years. So if you want to claim exemption under section 54, if you want to claim exemption under section 54, you are having 2 choices. Option 1, if you want to claim exemption, either you fulfill option number 1 or you fulfill option number 2. If you fulfill option 1 or 2, only in that case you can claim the exemption under section 54 for assessment year 25-26. The provision says you have to do one activity, either option 1 or option 2 up to due date of ROI. Due date of ROI is return of income filing. What are the return of income filing date? What is the process of filing of return of income, etc.? That is going to be discussed in chapter number 8. I guess unit number 8. That is filing of return. So how we need to file our return, etc., that is going to be discussed in detail in unit number 8. But for time being, let me tell you what are the date for return filing. Just give me a minute. Okay. So up to due date of ROI, which is return filing date. In short, let me tell you, it is either 31st of July 2025 or 31st of October 2025. For some assessee or for some circumstances, it would be 31st July 25 or it would be 31st of October 25. It is also 30th November in some case, but for a time being, the both dates are sufficient to understand this provision. So, section says that if you want to claim this exemption section 54, then you have to opt either option 1 or option 2 up to 31st July 2025 or up to 31st October 2025 as the case may be, depending upon the assessee. So who is the assessee? Depending upon that assessee, the date would be either July or October. So what option we have? That either we need to invest in purchase or construction completed. So if you want to claim exemption, either you have to actually purchase a property, not within 2 years, but within up to 31st July 25 or up to 31st October 25. You either need to purchase property actually or either need to construction completed up to 31st July or 31st October 25. If you are able to comply this, you can claim exemption under section 54 in assessment year 25-26. So suppose if we actually purchase 120 lakh rupees house property on 30th June 25, actually, then he can claim the exemption under this section 54. So there would be long-term capital gain. How much it was? 140 lakh. And because he invested before this date, suppose the date is 31st July. So he actually purchased a property on 30th June for 120 lakhs. So exemption can be claimed. Or if he if he complete the construction of a property up to this 31st of July or 31st of October, as the case may be, he can claim the exemption in this assessment year for that much amount. So now again, the problem is this. Okay, if we need to purchase or if we need to complete the construction technically up to 31st of July or 31st of October, then what is the benefit of this 2-year and 3-year provision? Because technically this 2-year or 3-year does not matter in this case. Suppose that transfer was on, we have transferred that property on 10th January 2025. So if the transfer is on this date in previous year 24-25, then what is the benefit of that 2-year or 3-year? Because due to 2-year, we need to invest up to 2027. And for the 3-year, we could invested up to 2028. But now the provision says that if you want exemption, you have to invest or constructed up to 31st July of October. So what is the benefit of that 2-year or 3-year provision? So practically, it is not possible that in case of house purchase that you are able to purchase a new property within 3-year, 5-year, or 3 months, 5 months, or 7 months. Or that is practically almost impossible that you are going to construct a property up to 31st October or 31st of July. So what is the benefit of the 2 or 3-year that has been given in option number 2? That if somebody is saying no, I want to purchase a property, I need time for 2 years because the act has given me the power of 2 years. or I am able to complete this construction within 3 years, because the act has been given me power of construction within 3 years. So I want to opt that option. So for that, option number 2 has been made. And it says, if you actually not able to construct or purchase any property up to due date of ROI under option 1, then you can, if assessee invest, or we can say deposit. There is a scheme framed by department, capital gain deposit scheme. So in bank, you can go and you can invest the amount, or you can deposit, not invest technically, you can deposit the amount in this scheme like an FDR. Like suppose you want to invest 120 lakh rupees, you have a gain of 140 lakh and you have decided that I will purchase a property up to rupees 120 lakh, or I will construct a property up to rupees 120 lakh. Not now, but within 2 years or 3 years. So government say, okay, you can do one thing, go into a bank and open a capital gain deposit scheme. And in that account, it's a kind of a FDR account. So in that account, the amount you will deposit in this scheme, whatever amount you will deposit in this scheme up to these dates, deposit in this account up to the above date, would be assumed as invested. So we will assume the amount you will deposit in that account, we will assume that deposit as you actually invested in the purchase or construction of property. Suppose you deposit in this account 110 lakh rupees. So income tax would allow exemption under section 54 for 110 lakh rupees in this assessment year, and they will trust upon you that the undertaking you have given will be going to be utilized. The amount of undertaking you have given and whatever amount you have deposited in this scheme is going to be utilized within 2 years for purchase of property, or if it is utilized for construction, is going to be utilized within 3 years from the date of transfer out of this account for the purpose of construction of a property. So you are not technically or practically utilizing this amount up to 31st July or October. You just need to deposit the amount in capital gain deposit scheme. And the amount you deposit will be assumed that you will utilize that amount in future within 2 years or 3 years for the purpose of residential house purchase or construction. And on this belief, income tax would allow you exemption under section 54 in assessment year 25-26 calculation. What will happen? Your capital gain would be 140 lakh, and we will assume exemption under section 54, 110 lakh rupees. In the same year, we will solve your capital gain on trusting your investment or deposit in that account. And capital gain would be charged on upon 30 lakh rupees. So now you did not actually invest it. You just deposit the certain amount in this scheme, and department will assume that investment as your real investment in purchase or construction of property. Now there must be a question in your mind. Suppose in future that amount has not been utilized. In assessment year 25-26, what will happen? Department will give you exemption and tax would be charged, assuming that you have invested that amount for purchasing of property. But the future could be different. Suppose the amount deposited, that is 110 lakh rupees, will having 3 implications in future. Suppose out of this amount, 95 lakh has been utilized for purchase or construction of residential house within time. So out of this 110 lakh rupees, suppose 95 lakh rupees has been utilized for purchase construction of residential house within time. So what we need to do? We do not need to do any implication, any treatment of this amount, because we have already given the benefit of 95 lakh rupees in assessment year 25-26. But the remaining 15 lakh rupees, out of this 110 lakh rupees, 95 has been utilized for the purpose. But out of this 110 lakh rupees, suppose 5 lakh utilized for other purpose, for car purchase. That's called misutilization, because it should be utilized for the purpose of residential house, but it has been utilized for some other purpose. So the amount misutilized, suppose it has been misutilized in assessment year 26-27. So the amount misutilized is going to be taxable as long-term capital gain, taxable in assessment year 26-27, 5 lakh rupees. This is going to be taxable as your long-term cap gain in assessment year 26-27 or in the year of misutilization. So we assume that the misutilization has been taken place in assessment year 26-27. So in that year is going to be taxable. The balance 10 lakh has been unutilized. It should be utilized, but it has been deposited in the scheme. It has never been utilized. It is still in the scheme. So it is going to be taxable as capital gain in the year 3-year expired. Because we could utilize that amount within 3 years from the date of transfer for construction of property, because the maximum time period government could wait that yes, you will utilize it later would be 3 years from the date of transfer. So in the year in which the 3 year will be expired, the balance amount is going to be taxable in that assessment year as long-term capital gain. So now you must have understand that how this provision will work, how we can able to claim the exemption in the same year. So you have option 1 or option 2. If you have, in the question you must see that if the actual investment has been done up to this due date of ROI, if the actual investment has been done, then we can claim the exemption in the same assessment year. There is no issue. But in most of the cases, the question will explain like this, that assessee has deposited some amount in capital gain specific scheme. The amount assessee deposit will be assumed as exemption or would be assumed as actual investment in the same year. So that would be allowed as exemption in assessment year 25-26. But in the future, it also been going to be mentioned in the question that out of that amount deposited, some amount has been misutilized and some amount has been unutilized. So misutilized amount need to be taxable in the misutilization year, and the unutilized amount is going to be taxable in the year 3 years expire. So that was point number 5 and 6, explaining that how we are able to claim the exemption in the same year depending upon our future investment. So point number 5 is saying if amount not utilized before the due date of ROI for acquisition or construction of house property. We can say before or up to the due date of ROI. It can be deposited with the nationalized bank in capital gain account scheme. The scheme name is CAGS. Capital gain account scheme. The maximum investment could be 10 crore, of course, because the section 54 is giving the benefit of 10 crore. So even if you deposit more than 10 crore, the exemption could not exceed the 10 crore. Now, what will happen with the unutilized amount or misutilized amount? Point number 6 explain it. It says, if deposit amount not utilized within time, unutilized amount or misutilized amount should be taxable as original gain in the year in which 3 year expires or in the year of misutilization. So directly that amount is going to be taxable in the year of misutilization or in the year 3 years expire. So very interesting provision. Anirudh is saying, sir, if we do construction for 3 years, we can take out money many times from the fund of CAGS. Yes, you can withdraw the money multiple times from this account. Until that 3 year complete, you have to show the bills that the amount you have utilized for the purpose of construction, and then you can withdraw that amount. There is a specific procedure regarding it. Hardik is saying, sir, if the amount is misutilized, will the assessee be penalized? No, there is no penalized provision. The amount of capital gain, which has been earlier exempted, is going to be taxable again. If there is any other kind of penalty or interest could be charged, that would be the case of fact. An assessing officer can decide about it. But there is no specific penalty has been specified in the act regarding this. So this was section 54, a very interesting section. Yes, CGAS, of course, might be okay. That capital gain, this is just, you can see now, it should be CGAS. Capital gain account scheme is just misprinting or mistyping. CGAS. In any case, there is any confusion, the study material will prevail. Okay. Chalo. Next, moving on, section 54B. Now, there's a very good news for you because section 54, we have discussed a lot of conditions, but almost 60% conditions are same in other exemptions also. So it's not that now we are going to discuss section 54B and it's completely different condition. Almost 60 to 65 or 70% condition restrictions are same as section 54. Same in case of section 54D. Almost 50, 60, 70% conditions are same exactly as section 54 explained. So once if you have completely understood the section 54 restriction and condition, then the other section would be a lot more easier for you because exactly the section 54 explains the provisions that assets should not be transferred for next 3 years, etc. Same in section 54B. If you want to claim the exemption, you have two options, either actual investment or deposit in the scheme. That is exactly the same also in section 54B, 54D, 54 F also. We have the almost same kind of provisions. So now the other section will not be that difficult, you will feel, because we have discussed section 54 in detail. Now, section 54B, applicability must be different in almost all cases. Section 54B says, if you transfer agricultural land, again, which agricultural land we are talking, urban or rural in this case? Hardik is saying urban, Anbidu is saying urban. Correct. Rural could not be here because there is no capital asset. The rural agricultural land is not a capital asset. But agricultural land in urban area, we have read that there is an exemption of section 1037. We just discussed today. So if agricultural land in urban area is having exemption under section 1037, then why section 54B is required? Because 54B would be there if there is taxable capital gain. But if we have already discussed that agricultural land exemption is there under section 1037, then why section 54B is there for agricultural land? What is the reason? Hardik is saying absolutely correct. Kasek is also saying absolutely correct. Veda is also correct. Very well done. Section 1037 only talks about when there is agricultural land compulsory acquired. Only when compulsory acquired by individual HUF used for last 2 previous year and OCEC received on or after 1404. But now agricultural land transfer. So transfer includes sale, exchange, barter, even compulsory acquisition is inclusive. Suppose if the property has not been used or compensation received before. So that section 1037 is only for compulsory acquisition, but section 54B considering sale, exchange, and every other aspects of transfer also. So that's why they both are different. If it is a case of section 1037, definitely we do not need section 54B, would not be applicable there. Okay. So agricultural land transfer, and what we need to purchase? Agricultural land. Why there is no construction? Section 54 is having purchase plus construction both. And in case of section 54B, only there is purchase. Why not construction? What is the reason behind it? सही बता देना मुझको. Correct. There could not be any construction because we are discussing the provision for land, not for building. So there could be purchase only. The assessee again, the benefit is available to only individual and HUF. The asset nature could be long term, short term. So this exemption could be claimed by a short term capital asset or could be by a long term capital asset. Amount of exemption is very simple, amount invested in agricultural land. So now this agricultural land, what we are going to purchase, should it be urban or rural? The agricultural land we are transferring, that should be an urban agricultural land. But the land we are going to purchase for the purpose of exemption should be only urban or rural. The exemption would be for investment in agricultural land for urban, rural. Any, of course, because the purchase land could be urban or rural, any of it. So the restriction on the agricultural land transfer, but the purchase agricultural land could be either rural or urban. There is no restriction on it. So condition is saying agricultural land situated in urban area was used by SSC or his parents or HUF for a period of 2 years prior to the date of transfer for agricultural purpose. So the agricultural land we are transferring should be used for 2 years by individual HUF or parents, same condition as section 1037. Purchase new agricultural land whether in urban or rural area, the time period for purchase is only 2 years. It's not 1 to 3 year, only 2 years. You have to purchase within 2 years from the date of transfer. The B point exactly same as section 54. It says the new agricultural land should not be transferred within 3 years after it purchased. If it has been purchased, if it had been transferred within 3 years, the C point exactly same. If newly acquired asset transferred within 3 years, the cost of that asset is going to be reduced by the amount of capital gain exempted earlier. Fifth and sixth point exactly same, only there is only one difference. The fifth point exactly same as section 54, the amount either need to be utilized up to due date of ROI, the actual purchase of agricultural land is required, or if you are not able to purchase up to due date of ROI, you need to deposit the amount in CGAS. Okay. CGAS. Okay, Abhishek? CGAS account. Okay. And if amount deposited is misutilized or unutilized. If misutilized, then taxable in the year of misutilization. But if unutilized, then it would be taxable after 2 years expire. In section 54, there was after 3 years of expire. But in section 54B, it's 2 years. Why? Because the maximum investment time under section 54 was 3 years for the purpose of construction. So unutilized would be taxable after 3 years. In section 54B, the time period is only 2 years for the purpose of investment. So unutilized would be taxable after expiry of 2 years. Clear? So you must be seeing that after discussing section 54, other section is so simple to understand. Section 54 is now too easy to understand. Now we have section 54D, but before that, it's almost 4 o'clock. So we will take a short break. Then we will come back with a small story and then we will continue our exemption under section 54D, EC and F. So, Vinu sir, can we take a short break? 10 minutes. Okay, welcome back everyone. So I believe that you must have your tea, coffee, etc. And we were discussing the provisions of capital gain exemption, in which we have discussed section 54B, 54, section 54 we have covered, and then we have covered section 54B. Now the time is for section 54D. So first of all, we will discuss all these sections 54D, EC, and F. Then we will discuss our story today because I need to complete this part today. Then we will, if we have time, then there would be a short story for all of you. Okay. So let's get started. So now section 54D talks about, it says compulsory acquisition of land and building forming part of industrial undertaking. So now technically we are discussing about factory. Industrial undertaking means factory manufacturing unit. So if you are having a factory, an industrial undertaking, and government decide to compulsory acquire your land and building, which is forming part of your factory. So in that case, you will get some compensation. And out of that compensation, if you purchase new land and building or construct new land and building for your new factory, so for that investment, you can claim exemption under section 54D. Please keep in your mind that if you transfer your factory, normally if you sell your factory like Mr. A, sell his factory to Mr. B. In that case, if Mr. A purchased new land and building for his factory out of the consideration he received from Mr. B, this exemption would not work because this exemption will only work if there is compulsory acquisition forming part of your industrial undertaking. So if there is a compulsory acquisition and from that compensation, if you are going to purchase a new factory, land and building, then this exemption will continue. If there is a normal sale and out of that consideration, you are going to purchase a new factory building, this exemption would not be applicable. This benefit is for all assessee. Asset could be long term, short term, does not matter. Amount of exemption, the amount invested in industrial land and building, that amount you can claim as exemption. The time duration for the purpose of investment. Before that, that industrial land and building was used by assessee for a period of 2 years prior to the date of transfer for business purpose. So this exemption could be claimed only by those factories which are in running. And from at least 2 years, they are in running positions. So if there's a factory which has been shut down, and if that factory has been compulsory acquired by the government, then this exemption could not be claimed. So at least 2 years from the date of transfer, the factory should be in running position. Purchase new land and building for industrial purpose. So that could be purchase or construction. Both are including because building is also there. And the time duration is 3 years, within 3 years directly. So if you have your building and land, which is a part of your industrial undertaking, has been compulsory acquired by the government, and if within 3 years you purchase or construct new land and building, again for industrial purpose, then exemption can be claimed. Again, point number B and C is exactly copy paste. New land and building should not be transferred within 3 years. If you transfer, then the cost of the acquisition of that new asset should be reduced by the amount of capital gain exempted earlier. For the purpose of exemption, either you need to utilize that amount actually up to the due date of ROI, or you can deposit that amount in CGAS scheme up to the due date of ROI. The amount unutilized or misutilized is going to be taxable respectively. If it is misutilized, it would be taxable in the misutilization year. And if it unutilized, then it is going to be taxable when 3 years is going to be expired, because the maximum time limit for the purpose of exemption is 3 years. So after 3 years, that is going to be taxable. So you can see that after reading exemption 54, 54B and 54D is so easy to understand because most of the provisions are similar. Now the provisions are going to be changed. you can see there's a common thing between section 54, 54B and 54D. What is the common thing between section 54B and D? One common thing between in these all three sections, except point number 5 and 6. LTCA, STCA, how it is common? In section 54, it's only required LTCA, but 54B and D required LTCA, STCA both. So I am asking, what is the common thing between section 54, 54B and 54D? The 3-year lock-in period is not important. The point number B, C, fifth and sixth, I'm not talking about. I am talking about starting points before that point number B, C, and fifth and sixth. Time durations are different. Amount of exemption is different. In first exemption, the maximum amount is 10 CR. And B and C, there is no restriction. What is the common thing? Deposit in CGAS. I'm not talking about those. I'm saying, please ignore point number B, C, fifth and sixth. Accept this. Before accept these points, what are the common thing between section 54, B and D? Vishmita is saying individual. No, Vishmita. In case of 54D, all assessee includes, not only individual. Abhishek is saying consideration must use for a specified purpose. That is the basic of exemption, but there is something common. The common thing is that what you are transferring, you need to invest in the same property. If you are transferring a residential house, you need to purchase or construct a residential house. If you are transferring agricultural land, you have to invest in agricultural land. If you are transferring industrial land and building, you have to invest in industrial land and building. So that was common in the nature. The other exemption, section 54 EC and 54F, in those exemption, the transfer and the investment things is going to be changed. The transfer asset is different and the investment asset is different under section 54 EC and 54F we are going to discuss. So this is section 54 EC. And it says any land and building or both, that should be long-term capital asset transfer. And we need to invest in a specified long-term capital asset purchase. So there are specific bonds, etc. we need to purchase for exemption under section 54 EC. So for the purpose of this exemption, the specified assets are bonds, etc. Government bonds, etc. we need to purchase. So now you can see the transferring asset is immovable property and the investment should be in some bonds debentures. So the transfer asset and the purchase asset is now different from section 54 EC. The maximum exemption under section 54 EC's limit is 50 lakh rupees. Clear? Assessee, all assessee can claim this exemption. The asset should be long-term capital asset. The amount of exemption, the amount invested in long-term NHAI bond, RECL bond, PFC, IRFC, or any other notified bonds, those are redeemable after 5 years. So we need to invest in only these specified bonds. The full form of these bonds have been mentioned here under. Just wait. Now the conditions. The condition says in earlier exemptions, the time period for investment was 1, 2, 3 years, and the second one is 2 years, and in third 54D it was 3 years. But now section 54 EC is only having 6 months time duration for investment purpose. Assessee has within a period of 6 months from the date of transfer invested in long-term specified asset. Long-term specified asset means any bond redeemable after 5 years of issue of NHAI, RECL, etc. The full forms are over here. National Highway Authority of India, Rural Electrification Corporation Limited, bonds of Power Finance Corporation and Indian Railway Finance Corporation. Newly acquired property provision has been changed. In section 54, 54B, 54D, the maximum time period was 3 years. Now the time period has been 5 years. The newly acquired assets should not be transferred or converted into money within 5 years from its purchase. Converted into money means on those bonds and debentures, you cannot mortgage and you cannot take loan upon those bonds and debentures via rendering them as a security also. So if you took loan upon those security, that again exemption would be gone. So if you cannot transfer, not even you can pledge those security as a mortgage property against any loan or borrowings. Until 5 years, you cannot do the conversion into the money or you cannot transfer it. If we do so, then what will happen? In the earlier three exemption, there was a provision which says that if you transfer those assets within 3 years, then the cost of acquisition is going to be reduced. But now the provision is going to be changed from this. From section 54 EC and 54F is having separate provision if you transfer asset before a specified time period. So section 54, 54B and 54D having the same concept. Like if there is sale consideration, suppose 100 lakh. Suppose there is cost of acquisition or index cost of acquisition 70 lakh. There is a gain of 30 lakh, long-term capital gain. Now let's suppose the investment, the new residential house, etc., has been purchased for rupees 40 lakh. Then 30 lakh is going to be reduced and there would not be any capital gain. If this property has been transferred within 1 year, we should need to lock in this property for 3 years, but suppose it has been transferred within 1 year and the sale consideration was 65 lakh. Then the provision says that the cost of acquisition, which was 40 lakh, need to be reduced by the amount of exemption claimed, that is 30 lakh. Remaining 10 lakh is going to be reduced and the balance 55 lakh would be short-term capital gain. But if the same question section 54 EC or 54F, suppose now sale consideration exactly same 100 less same cost of acquisition etc. 70. Suppose this is long-term capital gain 30. Then new investment suppose 40 lakh. So we'll reduce 30 and there would not be any gain. Now if this property has been transferred for section 54 EC, the limit is 5 years. For section 54F, the limit is again 3 years. Fine. But the implication is same. So if it is transferred within 1 year, the sale consideration is 65 lakh. Now there's a difference between the implication. The provision says that will not affect the cost of acquisition at all. If you violate the provision, if you transfer that property before that the specified time duration, we will not change the cost of acquisition. It will be same. So now the gain would be 25 lakh over here. But the amount exempted earlier is again going to be taxable in this year separately. So 30 lakh which has been exempted earlier is again going to be taxable in this year. So total would remain the same. 55, 55. There is no difference, but there is one difference. The amount is same, but there is technically one difference. What is the difference? This gain would be short-term capital gain, but the amount exempted earlier was long-term capital gain. So if it is taxable, so this gain would be long-term capital gain. So the gain, nature of gain could be different in this scenario, 54 EC and 54F. So the tax rate would be different because short-term cap gain tax rate is different and this tax rate has been different. So the total could be same, but the nature of gain would be changed. In section 54 EC and 54F, if property has been transferred before the specified restricted or lock-in period. Clear? So the implication will affect the total amount almost with the same effect, but the nature of gain would be changed. So you can see what point C says. It says if newly acquired asset transferred within 5 years, capital gain exempted earlier will be chargeable to tax as long-term cap gain in the year of transfer. It does not say that we need to reduce the cost of acquisition. You can see section 54 EC does not have point number 5 and 6 as other section have, because the time period is investment for only 6 months. So up to period of ROI, you need to invest in the bonds, etc. There is no requirement. If you invested up to 6 months from the date of transfer, you can claim the exemption. And if you are not able to invest up to 6 months from the date of transfer, you cannot claim the exemption. Clear? Here is a note for section 54 EC. It talks about long-term capital assets. So such asset can also be depreciable asset. In this case, building held for more than 24 months could also be treated. So if it's a depreciable asset, so let me tell you, in case of depreciable asset, the gain would be always short-term capital gain or loss, not the nature of asset. Very interesting thing. So in case of depreciable asset, the nature of gain would be always short-term capital gain or short-term capital loss. But the individual nature of asset could be long-term only. If it is held for more than 24 months, it would be treated as long-term building. And if that building is going to be invested in the consideration of that building is going to be invested for purchasing specified bonds and debenture, you can claim the exemption under section 54 EC. Here is the case law which has been decided that the depreciable asset nature could also be long-term capital asset, and they are eligible to claim the exemption under section 54 EC. Next is section 54 FN. This is most important exemption in my opinion. If I am going to set up paper, I will give this exemption in the examination, section 54F, definitely. Because it's different. The applicability, the nature, the implication, the conditions is completely different from other provisions. Almost maximum conditions are similar. Like point number B, C, and 5 and 6, similar. But other conditions is completely different, and it's very interesting to understand also. Because when you will read the applicability of section 54, you will find it out that it is completely different applicability as under section 54 EC or 54D or B, because they said you have to transfer this and you have to purchase this for claiming the exemption. Section 54 says you have to transfer a residential house and you have to purchase a residential house. Same as section 54B says that you have to transfer agricultural land, urban area, and you can purchase agricultural land in urban or rural area. 54D says industrial land and building need to be transferred, and you have to invest in industrial land and building. 54 EC says any land and building or both long term, and you have to purchase specified bonds. But 54F is saying you need to transfer any long-term capital gain. So that means the asset should also be long-term capital asset. So you should transfer any long-term capital asset, or there should be any long-term capital gain other than, listen carefully, other than residential house. If you transfer a residential house, then you cannot claim section 54F exemption. So you need to transfer any kind of long-term capital asset which result in long-term capital gain except residential house. कुछ भी बेचो long term, लेकिन residential house नहीं होना चाहिए. क्यों? Because we need to purchase. We need to purchase or construct न्यू रेजिडेंशियल हाउस। खरीदना या कंस्ट्रक्ट करना आपको नया रेजिडेंशियल हाउस एग्जेम्पशन 54F की लेने के लिए, बट यू कैन नॉट ट्रांसफर रेजिडेंशियल हाउस and you cannot purchase residential house to claim section 54 because logic hai, if you transfer residential house and purchase the residential house, then section 54 will be applicable. So for that purpose there is only already a section 54. If you have transferred residential house and you purchase a residential house, then there is already a section which has been made for this purpose, that is section 54. So if you want to take the benefit of section 54F, that is for those assets, those are long term, resulting in long term capital gain, but that should not be a residential house. Because if it is a residential house, then we have section 54. So 54F is for those person. Logically, if I'm going to tell you why section 54F is there, so there is a reason that section 54 has been made actually. Where we are having basic three necessity, the human three basic necessities like roti, kapda, or makan, and food, cloth, and shelter. They are three basic necessities. So we are talking about the shelter. So our government wants that everybody should have shelter for his own. So for that purpose, we have technically made two sections for the investment in schemes, section 54 and section 54F. Why and how? So those having already a residential house, suppose Mr. A is already having a residential house. So what he can do, he can sell this and he can purchase a new residential house. So section 54 will give the benefit because somebody is getting a new shelter. So we are providing this scheme, and because he is transferring to someone else, so someone else is also getting a shelter. Section 54 is giving benefit. So if I am having a already a residential house, and then I can take the benefit of section 54 by transferring it, and I can buy a new residential house and can claim the exemption. But suppose there is Mr. B, they do not have any residential house ever. He was always a tenant. His parents was always reside as a tenant in his life. So he does not have any residential property, but he is having other asset like shares, like jewelry. So he wants to transfer these and wants to buy a new residential house for himself or his family. So suppose if section 54F is not there, then these kind of person cannot take the benefit on purchasing a shelter, which is basic necessity of a human being. So to give the benefit to those person, those do not have a residential house already, but they are going to purchase a new residential house by transferring other assets. So for that we need a section. So section 54F has been drafted. It does not mean that Mr. A cannot take the benefit of section 54F. Like suppose there is Mr. C, he is also having a residential house. He also wants to buy a new residential house. So he's also having shares and jewelry. So he can also transfer that and purchase a new residential house and can take the benefit under section 54F. But the basic idea was to give the benefit to those person, those does not having a residential house already. So those can also take the benefit who those as having residential house. Like I am also having a residential house, but if I'll transfer my jewelry, shares, etc., and going to buy a new house, I can take the benefit of 54F also. But the idea was not that. The idea was for those person, those do not have residential house, and they are now trying to transfer their other asset and wants to purchase a shelter. So government says, do not worry, we are having a section for your benefit also, and that is section 54F is there. So you understood the logic behind it. It is not required for the purpose of examination. I am just trying to tell you so you would understand that why we need to create a new section 54F for investment in a new residential house when we have already a section 54 which gives the benefit to the person purchasing for a new residential house. So section 54 benefit can only be claimed by those person those are only having earlier residential house. So for others, we need to draft a section. So section 54 has been drafted. Clear? So now the provision says, the first line you should understand right now, that we need to transfer any long-term capital asset other than residential house. Any long-term cap gain other than residential house, and we need to purchase or construct new residential house. Only one in India. So like section 54, we do not have the right to claim two house exemption for section 54F. We can only claim one residential house exemption under section 54F. Assessee should be individual HUF. Asset should be long term. Now the interesting part was, first was this. Now second interesting part is point number 2. Amount of exemption. In all other sections, there were a provision which says the amount you invest would be claimed as an exemption. The amount you invest would be equivalent to your exemption, subject to a certain limit if there is any specific limit. Like in section 54, there's maximum limit is 10 crore. In section 54 EC, the maximum limit is 50 lakh. But you can claim the exemption of full amount. There is no other restrictions except that maximum limit is there. But under section 54F, the exemption is proportionate. It's not the complete or absolute exemption. It is a proportionate exemption you can claim by investing in such amount. And that exemption proportionate formula is, and that formula is very useful everywhere in section 54F. You have to use that formula in multiple places. So in normal exemptions, like for other exemptions, if I'll ask you, what should be the exemption amount? So exemption amount is equivalent to investment amount. The amount you invested, you will get the exemption. Of course, up to a certain limit in 10 crore or 50 lakh or up to the amount of capital gain. Fine, you cannot cross that. So if I ask you, in the case of other exemption, how much unutilized amount? How much unutilized amount is going to be taxable? If the time period expire, then how much unutilized amount is going to be taxable? So the provision is the amount unutilized is going to be taxable. The amount remaining unutilized is going to be taxable. How much misutilized amount is going to be taxable? So the provision is the amount misutilized is going to be taxable. It's very simple. The respective amount is going to be taxable. So for exemption purpose, investment amount is going to be equivalent to your exemption. Unutilized amount is going to be taxable. Misutilized amount is going to be taxable, full value, absolute amount. But under section 54 EC, there is a formula which need to be utilized whenever you calculate any amount for exemption purpose or for taxability purpose. And that formula is universal formula. It says original capital gain upon net sale consideration. So if under section 54 EC, I need to find out the exemption amount, then I need to multiply this formula with investment amount. So in normal case, it's investment amount. Now for finding out exemption under section 54 EC, I have to multiply this formula to calculate the exemption amount. Under section 54F, sorry, not EC, 54S. If under section 54F, I need to calculate unutilized amount taxable. Then I need to multiply this formula with unutilized amount. Unutilized amount multiplied original capital gain for net sale consideration. That would be my unutilized amount taxable. If in case of section 54F, the question asks how much misutilized amount need to be taxable. The misutilized amount need to be multiplied by original capital gain upon net sale consideration. Understood? So this formula is proportionate exemption, providing proportionate exemption and proportionate taxability in section 54F. So whenever there is a calculation requirement in section 54F, this original capital gain upon net sale consideration is going to be multiplied to calculate the specific amount. Okay. So this single formula you need to learn. So exactly amount of exemption provisions, same concept has been written over here. Original capital gain upon net sale consideration multiplied by new investment in the residential house. The 10 crore specific limit, the maximum limit as section 54 is also under section 54F. However, if the cost of new house invested in new residential house exceed 10 crore, the maximum exemption cannot exceed 10 crores. There are some conditions. Assessee should not own the date on the date of transfer the original asset more than one residential house. So this is exemption is only for those assessee. Those do not have more than one residential house except the house they are going to purchase or construct. So if you have already having two or more residential house, you cannot claim this exemption. Point number B says once you purchase or construct a new residential house for the purpose of exemption, then after claiming exemption, you cannot purchase any new house within 2 years or cannot construct any new house within 3 years from the date of purchase or construction of that new residential house. If you have done that, the exemption you have claimed earlier is going to be taxable in the year you will purchase a new residential house or you will construct a new residential house. The time period for construction purchase same copy paste as section 54, 1 year before, 2 year after, 3 year construction. The P point exactly same that the new asset cannot be transferred within 3 years. If you transfer, then same concept section 54 EC. Cost would not be reduced, but the capital gain exempted earlier is going to be taxable. Fifth and sixth point exactly same as other provision that either you need to purchase the new residential house up to due date of ROI or you need to invest in the capital gain scheme. So you can claim the exemption in the year of investment. The misutilized amount and unutilized amount is going to be taxable proportionately as per the formula in the year of misutilization or in the year 3 years expire. Same concept. Now there are clarification for those investment, etc. You have to go through with these clarification. We have already discussed that maximum two houses can be claimed. The exemption could not exceeding the capital gain or 2 crore rupees. The maximum exemption could not exceed 10 crore. So these are clarification regarding section 54 and other exemptions. The examples are over here. You can go through it. The investment under capital gain account scheme also cannot exceed 10 crore rupees. We have already discussed all these cases with the exemptions. Point number 5, point number 4, you can go through with these provision by yourself. There are example also, suppose the long term capital gain is 7 crore, cost of new house is 12 crore. So we cannot claim the exemption more than the capital gain. So even if you have invested 12 crore rupees and the maximum limit is 10 crore, but it cannot exceed your capital gain. So maximum capital gain exemption would be 7 crore. Again, you have 12 crore capital gain, investment is 14 crore, but the maximum exemption can claim 10 crore. So the maximum could be 10 crore exemption. 11 crore, residential house 9 crore. So because the maximum exemption could be in this case up to 9 crore, because investment of 9 crore is there, so you can get the exemption of 9 crore. Suppose 15 crore capital gain, you invested 30 crore, 13 crore, but the maximum limit is 10 crore, so exemption could not exceed 10 crore. There are example also, you can go through with simple examples. There are just need to explain when their 2 crore limit would be applicable, then how much cap gain you can claim as an exemption, etc. Consequences if you transfer this asset before 3 years. We've already discussed these provision in the above cases. There are illustration, normal illustration regarding the investment purpose, nothing complicated. You can go through it. If there is any problem, I will discuss those illustration in the next class. Notes for section 54F. 54F exemption would be on proportionate basis. We have discussed that also. So in these example, you can see if the net consideration is 15 crore, long-term cap gain is 7.5 crore, cost of new house is 12 crore, and maximum exemption is 10 crore. So how we will find it out? I told you original capital gain upon net sale consideration into investment amount or the maximum amount which is eligible for exemption. So in this case, maximum could be 10 crore. So that exemption would be only 5 crore. So you can go through with these examples. These are very simple to understand. Again, following example also you should try. These are not complete questions. We will solve complete question and test your knowledge. These are just examples to elaborate that how much exemption you can claim in different scenario. How it cannot exceed 10 crore, how it cannot exceed the amount of capital gain, etc. Section 54 we will discuss. Section 54H. It is not an exemption, it is just a clarification, which is really very interesting to be there. If it would not be over here, there would be really complexities to claim exemption under certain cases. Okay, suppose there is Mr. A. He is having a residential house, and this residential house has been compulsory acquired by government in 2022, and compensation, original compensation OC, will be 50 lakh. Clear? This OC received in 2020, 2024, 24-25 financial year. And this suppose 2020. Assessee Mr. A wants to purchase a new residential house. Out of this consideration, he wants to purchase a new residential house, rupees 20 lakh rupees. The long-term capital gain calculated by considering this as a sales consideration. Suppose the long-term capital gain value 22 lakh rupees. Now my question is, in which section Mr. A can claim the exemption? Which section is applicability? The applicability of which section would be here to claim the exemption for Mr. A? I'm not asking whether exemption can be claimed, other conditions fulfill or not. I'm just asking, is there any section which is applicable on this kind of scenario in which the Mr. A property has been compulsory acquired residential house? This was a residential house, of course. And out of that proceed, he wants to invest in the new residential house. So which section is applicable in this case? Vishmita is saying 54, Lahari is saying 54, Apurv is saying section 1037. Okay. Abhishek Mishra is saying 54D. Manvi is saying section 54. Okay. I'm expecting more answers. Kiran, 54H is a notification. It cannot be an exemption section, what we have discussed. I don't ask those query which I did not teach. Hardik is saying no section can prevail. Okay. Anyone? Kasak is saying no section. Pallavi is saying no section. Nayan is saying no section. Nayan is saying 1037. Jinki is saying no section. VR Nikitana is saying no section. Let me tell you, there is a section. Yes, of course. There is a section which will be applicable in this scenario. Now tell me which section. So answer to hai ki yes, section would be applicable. Which section would be applicable? Now you have to find it out. Now you have to tell me which section cover this kind of exemption. On the basis of transfer and purchase, which section cover this? Hardik is saying now 54. Abhi to Hardik mana kar raha tha. No section. How it's now changed? Your answer changed, Hardik? Why? Nitin is saying all section 54. Section. Okay. So section 54 cover this transaction. Section 54 says there should be a residential house which is transfer. And there should be a residential house which has been purchased or constructed. Section 54 would be there. The time duration, 3 year, 1 year, that is a different bar. But section applicability is there. If it is a compulsory acquisition, that is also a part of transfer. Na? Transfer covers compulsory acquisition. So जब जहां भी transfer word है, that includes sale, exchange, extinguishment, relinquishment, compulsory acquisition, conversion, etc. Each and everything. So section 54 is applicable, but the problem is something else. The problem is this: section 54 says that investment should be purchase or construction within 2 or 3 years from the date of transfer. What is the date of transfer in this example? What is the date of transfer in this example, students? It's 2020, correct? The year of compulsory acquisition, that would be transfer year. But the chargeability year would be this, taxability year, when he will receive the amount. Now, when he will receive the amount in 2024-25 of rupees 50 lakh rupees, he will receive. And in this year, capital gain is going to be chargeable to tax. Assessment year 25-26, that 50 lakh, and we have calculated tax gain is this one. That means cost would be 28 lakh. So 22 lakh would be your long-term capital gain, and you want to purchase a new house for rupees 20 lakh. But now the problem is this. Section 54 says you have time of 2 year and 3 year from the date of transfer. And transfer was in 2020. So 3 year was expired in 2023. So when you want to invest in 2025-26, the time period for even construction and purchase has been elapsed. So assessee, even if want to purchase within time, up to the due date of ROI, the amount of 20 lakh rupees residential house, he cannot claim the exemption because section 54 will say it should be within 2 year or 3 year from the date of transfer. And the transfer in this case would be in 2020. So that would be a problem in case of compulsory acquisition, conversion of capital asset, destruction of asset, in those cases in which the transfer year and chargeability year is different. So section 54H understood this problem. That yes, it would happen even in other sections also, like section 54, 54B, 54D, etc. Sare sections. So it says if in these section there is compulsory acquisition, etc. So in those section, the exemption time period would not be counted from the date of transfer, but would be counted from the date the amount received. The amount received would be the equivalent to the date of transfer. And if you able to invest within 2-3 years up to the due date of ROI, etc., from the date from which the amount has been received, then exemption can be claimed. So that was a genuine case to remove the hardship in these compulsory acquisition, etc. cases, because in these cases you would get the money later and might be till that the time period for investment must have been gone. So that was a very welcome provision section 54H has been made. So in case of compulsory acquisition of the original asset where the compensation is not received on the date of transfer, you can go through with these provision, of course. Next, there is an example of section 54F that is for proportionate basis cases that I will teach you in the next class. This example I will discuss with you in the next class. Now, clarification for section 54 is there. I will upload these notes today, do not worry. So the 2 crore cases, the 10 crore requirement, you can go through with this example also. It is completely solved. Reference to valuation officer that we will discuss in the next class. And then there will be calculation of tax. Let me show you the tax complexities provision. Fine. I have prepared a diagram for it, and I need to prepare it myself after so many time because the capital gain provision has been completely changed for the taxability purpose. So let me show you the provision for rate of taxes here started from here that we need to discuss in the last class. Rate of tax on short-term capital gain, then rate of tax on long-term capital gain. You can see long-term cap gain 112A, 112. Then again, if transfer is before 23rd of July, then after 23rd of July, and these are the provisions still going on for understanding the provision of rate of taxes. So huge provision. Again, rate of taxes not yet completed. Section 111A rate of taxes in case of capital gain provisions are there. Huge provisions, section 112 detailed provision for applicability of rate of taxes over here. These provision you should understand in the last class, section 112 rate of tax provisions. So I have tried to combine all these provision in a consolidated diagram, and it actually took me a lot of time to make chart for all of you. Let me show you. First of all, I need to draw that chart on my notes. You can see that. This is the diagram I have prepared. First of all, on chart paper by reading all these provisions. So you would be able to understand the provision on a single page. And then I made this chart on Microsoft Word and PDF file. So I will share it on the last class. But this chart is really going to help you to apply the correct tax rate or to even understand the capital gain structure rate of taxes. If you'll go with these provision, I can understand that it would be really difficult to understand what kind of rate, what provision we need to apply in which situation. This is really, really, really complicated, very complicated. Okay? But the diagram will help you a lot in this situation. So we need to discuss this reference to valuation officer in last class. Example of section 54F need to be discussed in the last class. Then we need to discuss the tax structure and the test your knowledge question. So that would all be able to cover in the last lecture. If there's any query, you can ask me, student. If there's any query, kindly ask me, student. Otherwise, we will conclude this class. स्टोरी, अरे सुनिए कि स्टोरी कौन कौन स्टोरी सुनना चाहता है बताओ तो फिर सुनाया जाए। 10 से ज्यादा बच्चों ने कहा स्टोरी तो आई विल टेल द स्टोरी। 1 2 3 3 4 5 6 7 8 9 10 11 12 12 13 14 15। Sir, can time period exceed for acquisition in life deposit C GDS more than 2 years? Same provision would be applicable, Hari. In case of compulsory acquisition, the 2 year, 3 year benefit would be there from the date of receipt of the consideration. Do not worry about it. चलो बच्चों तुम लोग स्टोरी सुने बिना मानोगे नहीं। चलो स्टोरी सुन लो फटाफट से, बाकी सब बातें करेंगे नेक्स्ट क्लास में। तो स्टोरी ऐसी है कि एक गांव था, हमेशा एक गांव होता ही है, और वहां पर एक किसान रहता था, और उसके पास एक बहुत बड़ा फील्ड था, एक बहुत बड़ी एग्रीकल्चरल लैंड थी फार्मिंग के लिए। तो वहां पर उसने देखा था कि उसके पापा, उसके जो फादर थे वो फार्मिंग करते थे, एंड उसके फादर का जो एग्रीकल्चरल लैंड था उसमें एक साइड पर एक बहुत बड़ी रॉक थी, रॉक पत्थर, बहुत बड़ी रॉक। उसके फादर ने उसे बताया था जब वो छोटा था कि ये बहुत भारी है, ये बहुत हैवी है और हम इसे हटा नहीं सकते, तो उस एरिया में हम फार्मिंग नहीं करते हैं। वो काफी बड़ा एरिया था, उधर भी नहीं कर पाते थे, उसके रॉक के आगे जो जगह थी वहां भी नहीं कर पाते, बिकॉज ड्यू टू रेन एटसेट्रा वह बहुत पानी वानी रहता था। तो बच्चे को लगा ठीक है ये नहीं हो सकता है, तो जब उसके फादर एक्सपायर हो गए तो ही स्टार्ट फार्मिंग एटसेट्रा। उसने भी वही किया, उसने कभी उस रॉक को नहीं, उस साइड पे कभी फार्मिंग नहीं करी, बिकॉज उसको भी दिखता था इट्स अ ह्यूज रॉक, और उसको शायद मूव करना वॉज ऑलमोस्ट इम्पॉसिबल विदाउट द हेल्प ऑफ अ लॉट ऑफ पीपल, और बहुत सारी मशीन के बिना वो पॉसिबल नहीं। धीरे धीरे टाइम निकलता गया और उस एरिया में भी उसे फार्मिंग करनी थी, बट ड्यू टू दैट रॉक वो फार्मिंग नहीं कर पाता था। एवरी टाइम इट थिंक्स कि चलो करते हैं, बट उसे लगता था फिर लोगों को बुलाना पड़ेगा, इतना आसान नहीं, इट्स वेरी डिफिकल्ट, सो ही नेवर ट्राई टू मूव दैट रॉक विद द हेल्प ऑफ अदर पीपल। तो अब जब बिजनेस बढ़ने लगा, फार्मिंग ज्यादा होने लगी, तो अब उसको एक टाइम ऐसा आया कि उसको लगा नहीं, अब तो ये रॉक को मूव करना ही पड़ेगा, इसके बिना मेरे जो बाकी फार्मिंग है वो खराब हो सकती है, वहां पर बहुत गंदगी है, बहुत सारा वाटर है, एक्सेट्रा। तो उसने फिर क्या किया, अपने दोस्तों को बहुत सारों को बुलाया कि भाई बहुत जरूरी काम है, उसने लेबर बुलाई बहुत सारे पैसे देकर कि मुझे एक रॉक हटानी है, तो प्लीज आप सब लोग आओ। एक दिन डिसाइड हुआ और इस डे पर सब लोग वो रॉक हटाने के लिए आ गए। अब जब वो रॉक हटाने की बातें चल रही थी, तो वहां एक जो दोस्त उसका जो बहुत साल पहले कहीं रहता था वो आया था, उसने कहा चलो मैं भी हेल्प करता हूँ। तो उसके पास एक हैमर था, और सब लोग जो डिसाइड कर रहे थे अभी और लोगों के आने का वेट कर रहे थे और मशीन का वेट कर रहे थे, तो वो दोस्त गया और उसने उस रॉक पर एक जोर से हैमर मारा, और वो रॉक पूरी टूट गई, क्योंकि वो अंदर से पूरी हॉलो हो गई थी। हॉलो मीन्स खोखली हो गई थी, उसमें पानी जाता रहा इतने सालों से, और वो बिल्कुल ही सॉफ्ट हो गई थी। और जैसे ही उसने एक हैमर मारा उसके दोस्त ने, तो वो पूरी तरह टूट गई। किसी की जरूरत नहीं पड़ी उसे लाने के लिए, वो पूरा टूट गया, उसको तो फिर इजीली हम रिमूव कर सकते थे। तो मोर ऑफ द स्टोरी इज दिस, कई बार हमें ऐसा लगता है कि हमसे ये काम नहीं होगा, बिकॉज पीपल आर सेइंग कंटिन्यूसली, बचपन से उसके फादर ने कहा था कि ये रॉक नहीं हट सकती, इट्स नॉट पॉसिबल। तो उसके दिमाग में था कि ये तो हो ही नहीं सकता और मुझे इसके लिए बहुत मेहनत करनी पड़ेगी, बहुत सारे लोगों को बुलाना पड़ेगा, बट उसने कभी खुद ट्राई ही नहीं की। और एक टाइम के बाद वो रॉक में पावर ही नहीं थी, एक हैमर से वो पूरी रॉक टूट गई। तो अगर आपको कोई बोलता है कि ये प्रोफेशन, ये कोर्स आपसे नहीं हो पाएगा, बहुत डिफिकल्ट है, दोस्त कहते हैं कि अब तो बहुत कम टाइम बचा है, अब तो अगले अटेम्प्ट की तैयारी करो, ये अटेम्प्ट तो स्किप करना पड़ेगा, सो डू नॉट बिलीव ऑन देम, एटलीस्ट गिव अ ट्राई। ट्राई करो, अपना पूरा बेस्ट एफर्ट से ट्राई करो, पता नहीं शायद वो प्रॉब्लम जो आपको लगती है इतनी डिफिकल्ट, वो उस रॉक की तरह हो। यू डिडंट इवन ट्राई, इतने साल तक उस किसान ने अगर ट्राई किया होता, तो माइट बी वो और फार्मिंग में अर्न कर सकता था, अपनी लाइफ में ग्रो कर सकता था। सो दिस इज द, वी कैन से द, योर ब्रेन हर्डल, उसको सबसे पहले रिमूव करना है। तो कभी भी कुछ ऐसा हो कि आपको लगे कि ये पॉसिबल नहीं है करना, तो विदाउट ट्राई उसे नहीं छोड़ना। इफ समबडी इज सेइंग कि दिस चैप्टर या इस टॉपिक को छोड़ दो, बहुत डिफिकल्ट है, एज आई एम सेइंग दैट कैपिटल गेन वाला बहुत डिफिकल्ट टॉपिक है, तो इसका मतलब ये नहीं कि उसे छोड़ना है। वी विल फाइंड अ वे टू अंडरस्टैंड ऑल द प्रोविजंस टुगेदर, कैसे भी करके, बट वी शुड नॉट डू, और वी शुड नॉट अटेम्प्ट दैट इज द फर्स्ट पार्ट ऑफ योर लाइफ। सो प्लीज, कभी भी कोई ऐसा आपको लगता है दैट somebody is saying कि आपसे ये नहीं हो पाएगा, आपसे नहीं करो, इसे कर, मैं नहीं कर पाया, आप भी नहीं कर पाओगे। वेरी इंटरेस्टिंग थिंग, जब मैंने सीए ज्वाइन किया था, तो मेरे घर पे एक भैया आते थे, मेरे बड़े भाई के फ्रेंड थे वो, ही वॉज डूइंग सीए। मैंने उनसे कहा कि आई वांट टू डू सीए, तो उन्होंने कहा अरे बेटा तेरे से नहीं होगा, बहुत डिफिकल्ट है, देख मैं ही कर रहा हूँ इतने टाइम से, अभी मेरा भी नहीं हो पाया, और बहुत मेहनत करनी होती है उसके लिए, सीए बहुत मुश्किल होता है। मैंने कहा अच्छा, बट मैंने कहा चलो करते हैं, ट्राई होता है तो ट्राई करेंगे। एंड हुआ क्या, मेरा पूरा सीए हो गया विद इन 3 ईयर, आई हैव कंप्लीट माय चार्ट अकाउंटेंसी कोर्स। एंड मेरे सीए बनने के बाद, वो मुझसे पहले से कर रहे थे 1 1.5 साल पहले से, और मेरे सीए बनने के भी शायद 3 4 ईयर बाद वो सीए बने। तो अगर मैंने ऐसा सोच लिया होता कि नहीं मुझसे तो होगा ही नहीं, ये तो भैया ही नहीं कर पा रहे, ये तो इतने होशियार थे क्लास में, मुझसे टॉपर थे, मैं बहुत एवरेज स्टूडेंट था अपने क्लास में। It's all about your mindset. If you decide to do something, if a human being can decide that I have to do this thing, then nothing can stop you. Nothing. It's just about you have to be that will. You have that willpower and that confidence that I will do it. I will do it anyhow. And of course, the right procedure, the right guidance, the work you need to be allotted. सिर्फ सोचने से तो नहीं होगा, you have to make a right path for it, you have to make a right plan for it, then nothing is impossible, सीए भी हो जाएगा और सब कुछ, don't worry. ओके, ओके, बाकी सारे डाउट हम बाद में लेंगे, बिकॉज आज इलेक्शन है तो मुझे भी जाना है, आईसीआई के इलेक्शन चल रहे हैं। वॉट एवर डाउट्स यू हैव स्टूडेंट्स, यू कैन आस्क मी इन द नेक्स्ट क्लास। ओके, सो सर, सर कैन वी क्लोज दिस सेशन?